Hi everyone, welcome to Matt's Minutes for the month of December of 2017 as we wind down the year and approach the holiday season. Hope you're all having a wonderful time relaxing and looking forward to enjoying some time with family and friends. Financially, things are going well. We're still in what we would call a bull market, and one of the things I wanted to do on this video today is give you some perspective. So halfway through the month of December, as of December 15th, when I look at the S&P 500 and I look at the Dow Jones, kind of when someone says, how's the market doing? The S&P 500 was up around 19.6% for price return. Dow Jones was up around 24.8% price return. And that's from January 1st to December 15th at the close of that Friday. And if I isolate just the stock portfolio, now again, being on a broad video like this, I can't speak specific to your portfolio, but if I look at all equities, all stocks combined that Richmond Brothers manage, and then I compare that to the market, your stocks are up on average 34.9%. When you say, well, why isn't my portfolio up that much? Well, we typically, especially if you're retired, we don't have all of your money in the market. So we have other things, for example, bonds or fixed income, some guarantees through fixed annuities, products like that. So when you blend it all together, we don't expect your portfolio to do what the market's doing. But if I isolate your stocks are still performing exceedingly well, comparable to what's happening out there in the overall economy. The other thing I wanted to mention is, even though it feels like if you look at your September 30th, your end of October, your end of November statements, you've seen values come down just a little bit from the last couple of months. Let's have a little bit bigger perspective and take a step back and say, how are we doing for the year? Find me an advisor or find me someone where every single day, every single month, the values grow in a perfect straight line up. It's pretty rare that that happens. So, we've taken a little bit bigger perspective, take a step back, and when I look year to date, across all of your assets, they're performing exceedingly well, especially compared to the benchmark. So I wanted to talk on that. Big picture, as we head into 2018, we are actually optimistic. According to some Guggenheim research we've read that's very extensive, and also another analyst that we look to for really good guidance, we think the next recession is probably being pushed off a little bit, maybe to late 2019, possibly 2020. That said, we still could have a correction, we still could have a black swan event. What's a black swan event? For example, something happens with North Korea or some political event that doesn't have anything to do necessarily with business cycles, but it still can have an impact on the market. When you look at the leading economic indicator index, which is a broad measure of things like manufacturing orders, jobless claims, interest rate spreads, consumer sentiment, all of those indicators are actually quite positive. And again, how I would categorize how we're feeling is, I would say we're not worried, but we are watching. We're in a pretty mature cycle of this market, and so again, it doesn't mean just because we're in a mature cycle that a bull market dies of old age. There's certain catalysts that would trigger that. According to a research report by Citibank, the price to earnings ratio of the S&P 500 has now hit 26 times, and the historical long-term average for the price to earnings ratio for the S&P 500 is 16. So ultimately, over a long enough period of time, the S&P 500 will always revert back to that historical mean, according to research. Well, what does that mean? Eventually prices will come back in line. And so there's a lot of hype around tax reform. As of the recording of this video, tax reform has not been approved at this stage. There's a lot of optimism there, but again, we'll wait and see. So again, we're positive about 2018. I mentioned last month that I would talk briefly as we come on January. That is Roth IRA's 20th birthday. So 2 decades of availability where you could have been putting money in an account that was not deductible up front. Follow a few rules, and then over your life and over your contingent beneficiary's life, it's a tax-free account. And so I would just urge you to continue to pay attention to that status. There is possible changes in the tax code relative to IRA to Roth conversions and your ability to undo them or recharacterize them if you get into the October of the following year, and so we'll have to see if that comes on the chopping block. I sincerely doubt the government would ever stop us from contributing or converting to Roths because they love it when we pay tax before we technically have to. Make sense? And so I think there's a few things we're waiting to see as we wind down the year, but again, wanted to give you some of our sentiment heading into 2018. Wanted to give you some perspective on what we're seeing if you look back over the last 3 months. And hope you all have a wonderful holiday season. We're honored to have the opportunity to serve you. Thanks so much for tuning in, and we will see you next time in 2018.